Hi traders, this is one trade that I'm looking at for tomorrow, for Tuesday the 14th of November, and it's the Bank of England's CPI inflation data. Now this is a very interesting piece of data release, and just to put it in this context, the Bank of England have recently increased their interest rates, and you can see the reaction that the market took to the increase in interest rates here. The market sold off very heavily. Now that's counterintuitive. If any central bank raises their interest rates, typically a currency would appreciate. So why did the pound sell off so heavily? Well, the answer is that the market was fully expecting the Bank of England to increase their interest rates, which they did. And the way to trade this kind of event was to buy the rumour and sell the facts. That's exactly what I did. I bought the rumour and I made 100 points on the increase in the pound in the anticipation of the interest rate rise. And then when the interest rate decision came up, the bank didn't surprise the market. Interest rates were increased, and so the market sold off. That was selling the fact. Now, I tried to join this sell when it happened, but I was looking for a bit of a retrace to get in. It didn't retrace enough. Okay, I'll just keep my powder dry and wait for another day. Now, the data release that's coming out tomorrow is really significant, or could be very significant, because the Bank of England have said that they're quite happy with with inflation data to be around 3.2%, and they're expecting it to increase a little bit. So if that does actually increase, then beyond that figure, say it's 3.5%, 3.4%, anything like that, or even higher, then the market's going to think the Bank of England hasn't quite got their tabs on the interest rate, haven't quite got their tabs on the inflation problem in the UK, and further interest rates rises are going to be needed. So if you get a surprise to the upside, we're going to expect to see the pound appreciate. If conversely that CPI data comes out lower than expected, 2.6, 2.7%, then the market's going to think, okay, the Bank of England isn't going to be wanting to get into any kind of cycle of raising interest rates. They've already said they don't want to do that anyway, but as soon as that data comes out that low, it will say the Bank of England's getting on top of inflation, it's coming down. They're not going to want to raise interest rates. We've got Brexit going on in the background. I don't want to put any more pressure on consumers. I don't want to put any stress on the economy as we're trying to work out how we're going to do with Brexit. What's the end deal going to be like? When's it going to come? All these problems. The last thing the Bank of England wants to do is to pour further fuel onto that potential fire. So the interesting thing technically, when you look at the pound dollar, you see there's a really strong coil. See those bars, they're coiling inside each other, and typically when you get coiling bars, the market just wants to break out. So this could be the catalyst for a breakout, and if it is, you could expect to see some strong moves up to 1.35, and then up down to 1.28 down here, maybe 1.27. So look for those moves. Look for this data being a catalyst for that. And try and trade the retests of these highs and lows if we do get a breakout. So watch out for that. If you like this video, hit like. If you want to subscribe, hit subscribe. You get these videos as they come out. And if you would like to leave a comment, maybe how are you trading it? What are you looking at? How, even at the event, when you say leave a comment, let me know how you're doing. It'd be great to just share and see what other guys are doing. Okay, have a good day, guys. Take care. Bye.